Welcome to Vector News 24. I'm John, and this is our full trading day recap for Tuesday, April 14th, 2026 at 8:45 p.m. New York time, along with a financial analysis breakdown and a look at today's top economic news, including crypto markets. Let's start with the big picture on the NYSE. After a volatile open, U.S. equity markets managed to stabilize throughout the trading session and finished the day on a mixed to positive note. The S&P 500 and Nasdaq Composite both closed higher, led by a rebound in major tech names, while the Dow Jones Industrial Average tracked slightly above the flat line. This reversal came after yesterday's risk-off sell-off, triggered by rising oil prices and geopolitical tension in the Middle East. From a financial analysis perspective, the key takeaway is that markets are starting to discount not only the immediate oil shock, but also the expectation that any surge in energy-linked inflation may be temporary, as long as the underlying demand picture and labor market data stay relatively stable. The way the market absorbed yesterday's weakness and printed a recovery today suggests that positioning is still long-term bullish, even with short-term fears around geopolitics and supply-side shocks. On the economic front, today's headline-driving data were the U.S. Producer Price Index numbers and several Fed-related speeches. The PPI report came in slightly above expectations, confirming that input price pressures are elevated, but the reaction in equities was muted. Markets appear more focused on the core narrative that the Fed can still manage the macro backdrop without a major policy shock. Federal Reserve officials also repeated their message of cautious optimism, emphasizing that they are watching data carefully and are not feeling any rush to change rates. Turning to crypto markets, Bitcoin and Ethereum both recorded solid gains on April 14th, with Bitcoin trading above the mid-$70,000 range and Ethereum hovering near the mid-$2,300 area. The rebound in major crypto assets was driven by a mix of risk-on sentiment in broader financial markets and a technical bounce after recent volatility. However, there is still a clear overhang from the upcoming U.S. tax deadline on April 15th, as estimates suggest billions of dollars in crypto-related selling pressure could hit the market as investors liquidate holdings to cover capital gains taxes. The so-called Bitcoin tax season effect will likely keep crypto volatility elevated over the next 48 hours. For the average investor, the main lessons from the NYSE session on April 14th are: markets can quickly rotate from risk-off to risk-on as sentiment shifts. Tech-heavy and growth-style stocks continue to act as the primary engine of the recovery. Economic data and Fed commentary remain the key anchors, even when oil and geopolitics steal the headlines. Crypto continues to move in parallel with risk asset mood, but with an additional layer of tax-related seasonality and liquidation risk. Now let's move to part 2, where we'll look at what to expect tomorrow, Wednesday, April 15th, from the U.S. markets, and then to part 3, where we'll turn our focus to Tokyo and the Nikkei as trading kicks off there at 9:45 a.m. local time. Looking ahead to Wednesday, April 15th, the NYSE and broader U.S. markets are entering a data-heavy part of the week that could set the tone for the next several trading sessions. The main drivers will be domestic economic releases, the ongoing earnings calendar, and the evolving crypto tax season backdrop. Start with macroeconomic data. On April 15th, the U.S. releases March export and import price data, the Empire State Manufacturing Index for April, and the NAHB Housing Market Index. Export and import prices will give additional color on how higher energy costs are feeding through the trade side of the economy, while the Empire State Survey will show whether manufacturers are still feeling confident about business conditions. The NAHB Index will offer a snapshot of the U.S. housing market, which remains sensitive to interest rate levels and affordability concerns. Any clear beat or miss on these reports could nudge the Fed narrative and, in turn, affect bond yields and equity valuations. From a policy standpoint, the Federal Reserve calendar includes several scheduled speeches and interviews. Although there is no formal FOMC meeting, the tone of these comments will matter. If officials sound more cautious or emphasize the risks of persistent inflation, that could weigh on risk asset positioning. If they lean dovish or stress the resilience of the labor market, it could support the ongoing equity market rally. On the corporate side, Wednesday brings more first-quarter earnings reports, including major names such as Morgan Stanley, Bank of America, and other large financial institutions, as well as companies in transportation, insurance, and regional banking. After the strong earnings growth expectations set for the quarter, markets will be watching whether banks and cyclical firms can maintain healthy margins despite higher funding costs and the energy shock environment. Any disappointment in loan growth forecasts or trading revenue tone could spark sector-wide selling, while positive beats could extend the relief rally theme seen today. For crypto markets, the focus will be on the April 15 IRS deadline. Analyses estimate that up to several $billion worth of forced selling pressure could hit Bitcoin and other major tokens as taxpayers raise cash to cover their obligations. The pattern in prior years has been for crypto to trade weakly in the days immediately before the tax deadline, then see a more constructive setup once the forced selling window closes. If that pattern repeats, we could see increased volatility and short-term downside on April 15th, followed by a potential rebound in the days after, depending on the broader risk sentiment environment. For traders and investors, the key things to watch tomorrow are how the indices react to the macro data prints, especially export-import prices and the Empire State Survey. Whether the banks and other cyclical stocks hold today's recovery or roll over under pressure from higher costs and margin concerns. The tone of Fed commentary and any hints about the future path of interest rates. How crypto prices behave around the tax deadline window, and whether the market treats it as a short-term overhang or a more structural risk. If you're holding long-term positions, it makes sense to stay anchored to your time horizon and risk tolerance, rather than reacting to every intraday move. If you're trading shorter term, pay close attention to the pre-market and early session action, because the first 30 minutes often set the intraday bias and can reveal whether buyers or sellers are truly in control. Now let's move to part 3, where we'll turn our focus to Japan and look at the Tokyo session and the Nikkei as they open for April 15th at 9:45 a.m. local time. Shifting our focus to Asia, the Nikkei 225 opened for trading at 9:45 a.m. Japan time on Wednesday, April 15th, and the early session gave us some important clues about global risk sentiment. Asian markets often take their cues from the prior U.S. close, and today they are starting the session with a modest risk-on tone, reflecting the rebound seen in the S&P 500 and Nasdaq. The Nikkei 225 is trading higher in early session action, helped by a combination of supportive U.S. textile momentum and a more stable yen-dollar backdrop. Japanese exporters, including automakers and electronics firms, are seeing some of the strongest gains, as a slightly weaker dollar tends to improve the competitiveness of Japanese products abroad and supports earnings. The Bank of Japan's policy stance remains a key factor. With global inflation pressures elevated by oil and supply-side shocks, markets are watching for any sign that the BOJ might tweak its ultra-loose framework, even if only at the margin. For now, officials appear content to keep yields low and support domestic growth, which is helping to cap any sharp moves in the yen and providing a broadly supportive backdrop for Japanese equities. However, any surprise commentary suggesting a shift toward more tightening could quickly change the tone in Tokyo and ripple across Asian indexes. Corporate-level news in Japan is also important. Several large-cap names reported earnings in the past week, and the overall tone has been cautiously positive, with many firms highlighting resilience in domestic demand, even as global trade remains choppy. Any guidance upgrades or downgrades announced today can add an extra layer of volatility to the Nikkei and shape the day's intraday trend. Beyond Japan, other Asian markets are also in the mix. Mainland China's indexes are trading in a relatively tight range, as investors balance concern over higher energy prices with hopes for continued policy support from Beijing. Hong Kong-listed stocks, particularly in finance and real estate, are sensitive to both U.S. rate expectations and domestic Chinese economic data, so any surprise announcement from Chinese authorities or the Hong Kong Monetary Authority could move the region quickly. For global traders, the key takeaway from the Tokyo opening session on April 15th is that risk assets are starting the day on a cautiously positive note, with the Nikkei and broader Asian markets reflecting the U.S. market's rebound. Strong gains or sharp reversals in Asia can often feed into European and U.S. trading later in the day, so this session is not just a regional story. It's part of the larger global risk cycle narrative. If you're following the NYSE, keep an eye on how U.S. futures and tech sector sentiment react to the tone of the Nikkei and related Asian indexes early in their session. Any divergence between Asia's move and the U.S. Open tomorrow can signal a short-term tactical shift in the market's directional bias. That wraps up our full recap of the NYSE trading day on April 14th at 8:45 p.m. New York time. The financial analysis, top economic news, and crypto market developments, plus a look ahead to April 15th and the Nikkei trading session in Tokyo. Stay tuned to Vector News 24 for daily updates, deeper dives into the data, and clear breakdowns of what's happening in the markets and how it affects you. Until next time, this is Your Name, signing off.